So we'll see what happens, Lydia. See if we have sound for you, Cable Queen.
Yes.
We do have sound. All right.
Okay, enjoy the interview.
Thank you, Steve. Blake says hello, Lydia.
Hey, Blake.
Everyone welcome Lydia Idem. Everyone welcome Lydia Idem Finkley at Faith Might. Specializes.
Hey, Dale. Good morning, everyone.
Yeah, good morning, Lydia. Perfect time to have you on after the surge we had in the pound last week. So
yeah,
I see you want to start with the pound against the commodity currencies. So
no, let's start with
what you're seeing here. Okay.
Yeah, let's start with cable because yeah, I think that one's probably the one that caught everybody a little bit off guard last week. Just in terms, maybe in terms of direction, not for me. I've been bullish the pound for several months now. We were just waiting. We had a lot of this choppiness going on, you know, for probably most of the year. But it was when we broke above $1.2775. You can, you know, I marked it here, and we just kind of had this grind. I couldn't get in because we weren't getting these retracements. You know, I love the fibs, and I couldn't get an entry point. And even when we topped out at $1.3048 back then and back in May, we were still coming to this line. So we had a lot of, when we finally broke below it, we had, you know, we had a lot of sellers come in, and this is actually the 50% fib of, you know, this entire kind of grind higher. And it's right there, right into the 38, touched below, had a little bit of former highs, and then we powered higher. So I have been bullish for this for, I shouldn't say most of the year. I should actually say I was bullish, and then we had the election, out of the UK, the snap election, and we had that hung parliament. I was probably one of those, I was definitely one of those who just thought the hung parliament was bearish, that this was going back at least to 125, and then we would see, you know, what would happen after that. And it just didn't play out at all. And what was really kind of fueling my bearishness was really against the euro pound, and we were seeing this thing just go despite even, you know, some of this grind upward against the dollar. The pound was steady weakening against the euro. So I mean, I was steady bearish on the pound, and at the same time against everything else is when we were having these kind of downturns in on the other crosses, but I was still turning bearish, and I thought hung was gonna be it. That was gonna be what she wrote, and we didn't get that. And in fact, so when we start to see fundamentals and technicals like not moving together, the technicals will win, right? Every time. So, and then the fundamentals will tend to follow later. And that's kind of what we've had here, again, particularly against the dollar, where we've been seeing that the lack of a majority in the parliament has actually been great for people who wanted to remain, right? Or the soft Brexiters, or those who don't want to Brexit at all. It's actually been a good scenario for that particular opinion. And as such, we've been able to see the pound rally. But another thing I think,
Okay, go ahead. Well, I see that you have fibs drawn here, Lydia, which to me implies you're looking to buy a break, buy a pullback here. And I'm curious if you have any, like what your upside targets for perhaps the pound could be if you remain bullish for the rest of the year. And then the second question was, you showed EG. To us, that was a pretty significant reversal, which actually favors pound strength over euro strength. So that may even add to your thesis.
Yeah. So first, the upside target, probably see it better on a weekly chart.
Yeah.
Maybe I can come in a little bit. Well, weekly we can stay here, I guess. So my weekly chart, if I could clean this up a bit here, my upside target is actually 133.50 first into 135. So this kind of rezone where when we first had this breakdown in 2016 below 135 for the first time in some decades. we kind of had all these kind of spotty highs. I think people remember when we couldn't really gain any traction lower, right, until until May came in and said we're having a hard Brexit in March, and that's when we got this break lower to 120. So that's my upside target, is actually 133.50 conservatively, and then 135. I definitely think we're going to go to 135. And what I think will happen, if it happens during the summer, I think we're going to have kind of this grind action that we had that we've been having at $1.30, where we touch 130, or with the 130, when we touched 130, we kind of dip below, and then we kind of grind sideways, and finally we broke out last week. We're probably going to get that same kind of action around 135 and 133.50, just kind of grinding out until we get some direction. I think we'll get direction, that kind of direction probably in the fall, when we're all, you know, full steam ahead with momentum and liquidity. But I really thought we would trade sideways all through the summer, you know, typical summer doldrums. So I was quite pleased actually with the breakout in the pound dollar. And I think that, you know, you just got to be discriminate with your entries. But yeah, I'm a bull. I think the dollar weakens, and I think that dollar weakness actually fuels the pound higher. What's been surprising is that this entire run has been following the euro higher against the euro pound, particularly when the French election ended up not with a populist candidate, right? So with their presidential election, we really saw the euro take off. And I agree that the reversal last week is very significant, actually, because we were looking at the weekly. When we got that surge, that rally to 89.50, and this candle was green. Last week's candle was green, and it was the first time. It was the first time since this, since the May's announcement of an election, not an election, but of the hard Brexit in March, and the trigger of the Article 50, when we went up to 92, it was the first time that we had a green candle on the weekly chart above 88.50. And so
false breakout.
Right. So I'm thinking, if we close up here, not only would it be bullish, I mean, it would be a confirmation of the candle prior where we closed right at 88.50, and that would indicate, for me, definite bearish run, a bullish run to 90. Right, and so we got that immediate reversal, and I was still fairly confident. I think I had this fib here drawn in 88. Yeah, we were dancing at 88.50, and I said, okay, you could still roll up. We could still bounce from here, and we did, and then we fell over and we rolled over here into 88, and I had another fib drawn. And I think we could see that maybe on the daily chart. I had a fib from here drawn, which showed us we could find some support at 88. Right here at this 50% line, 87.97. So 88, and I was long there too. And then we fell over on Friday. And this support here is, we have all these former lows. And what I was looking for at the open was, to this week's open, was a bounce higher. So to me, if we had popped right at the open, we would have had all these former lows, would have been some support. We would have seen that, okay, we had buyers stepping in at a great price level, right, to take us to 90. And what we got was we got some sogginess, some weakness, and we're having a bounce right now. Really, this bounce to me is just a retest of these lows.
So you favor selling rallies in euro pound now?
I actually am. Okay. And I've been bullish the euro pound for months. Had a great run on it twice. I've been able to catch these waves. And so to me, the fact that we are really just testing lows, to me, we're testing former resistance or former support after a break of the support level. And we can draw a fib in here to see if we really get like pound weakness really kind of falls over, particularly against the euro. Against the dollar. So if we see this start to really fall, like, it's coming off of the highs now. If we see the pound dollar able to fall more, now that the euro pound is actually being led by pound strength and not euro strength as it has been over the last couple months, I mean, a rally would take us back to here, but you can see even as high as 88.20 really isn't a reversal or a call for bullishness. So just a fib here, just to see really how high this bounce can get before you need to turn bullish, and we would actually have to close again above 88.50 to even get bullish. And I don't think that's something that we're going to see. And if you've been trading the euro pound for any length of time, we're going to note like 88.50 is huge resistance, right? We've seen failures at this level time and time again, particularly after, you know, these great run-ups. If you look at a monthly chart, 88.50 is the top line. You know, failing at this level is not uncharacteristic.
Write that number down, guys.
88.50. That's our line in the sand, just typically for this period. So getting failures here is very characteristic. And I know I have a fib on the daily chart, but I don't even think that this is going to be valid. What I'm seeing is just this range bound between 88.50 and 83.50. I think if pound strength is going to take over, we're not going to see a fib play here. We're going to see a fall back to the bottom of the range. And what we're looking for here is this 86.50, 86 zone. I'm sure we'll get a bounce in here. I'm sure we'll see some buyers step in here. But if we break below 86, I'm confident that we just go back to the bottom of the range. And
really, you know, the possibility of the break that we had in September, having a break of equality from last week's high is also a scenario, which would, you know, kind of be an ABC before maybe the bull market resumes. We're on the verge of, before we go to Guppy, Lydia, I want to give you kudos for staying the course, long equities with your RIA base, your client base. Congratulations on staying with that. So you're very welcome, well deserved. So yeah, you're seeing we're sitting here at potentially a major breakout. Is that the way it looks to you, or do you think maybe one more pullback before we go?
So we're getting that pullback. So funny enough, this last week, even last week, I was looking at this setup against 148. It's a bit of a trend line, but really looking at this setup against 148 and thinking that we could get a push lower as we were getting some yen strength, maybe early in the week, and that didn't play out. So, I mean, I think that was early last week or even the week before. And, you know, I thought that, you know, we could get this kind of break and we would break lower. And so we did this. And last week even, I mean, I was positioned 2 weeks ago, got stopped out when it popped above 147.50. We got this break to 145.50. And if we were going to get yen strength, then we would have seen this fall lower. And we got buyers coming in. This is not a fib. This is just people coming in at support. Some former lows back here in April or in back in June. And what I'm seeing to me is this is pretty significant. Even though we've fallen below 147, the fact that we've been able to forge some candles above the trend line here is something we haven't done at all. So even if we go back to this level again, we have these couple candles, we keep coming in at 147 or 147.50, and we've kept falling and failing, right? But this is kind of the first time this week that we're kind of seeing a little bit of support and bulls trying to come in and push this higher. So yeah, I actually do see a break higher. I don't think that I think any dips like this will end up being bought. It's just been difficult to kind of gauge how much this thing is going to dip and where the buyers are going to come in. You know, it's been 146, anything kind of below that, this has been 145.50, has just been an opportunity to buy. So yeah, I stand kind of with you guys on the fact that this is kind of poised for a break higher. And obviously we don't get proof of that until we can get above 148 and hold above 148. But it looks like, you know, we might get a triple top here, and I think that we would see actually a break higher, particularly if this pound strength continues to roll for us.
Okay, great view, Lydia. At first you had I believe the pound Aussie up. So your view on the pound versus commodity currency.
So the Aussie, yeah. So this is the pound against these commodity dollars. Like Friday, I just said, or even early yesterday, I just said, correlations are shot. There's no correlations right now in the market. That's obviously my view as pound, but just feel like any kind of standard correlation hasn't been playing out with the pound. Like we've been seeing pound weakness against everything except the dollar. And then we've seen, we saw pound strength last week against everything except the Aussie and the CAD. For obvious reasons, CAD, they have
that's a great point, Lydia. That's happening everywhere. I mean, there were days last week, U.S. dollar yen was down 100 pips and the S&Ps were up 10 handles.
Right.
And that's supposed to be risk off. Yeah.
Right. The dollar was down, but oil hasn't really moved higher. So it's like a lot of these correlations where I would say, to a lot of people, to everyone really, trade the chart. It's every man's for itself. It's every chart for itself right now. Correlations are just not really playing out like we have.
Yeah, great advice. Trade it like it's, every child you have is different, right? So every instrument is different, right?
Yeah, every instrument is different right now. We can't really, if you're trading on correlations in the past, I would advise you not to rely heavily on correlated moves for at least maybe the second half of the year. We'll see how it develops after the summer even, but I think you can't rely on these correlations. I mean, look at the Aussie dollar, the Aussie against the pound, and then the Kiwi against the pound. Usually these move together, and Kiwi has been weak, where the Australian dollar has just been strong. For me, I see it here on my 240. For me, it's just been a matter of coming into and holding these things short. So
selling rallies. So if we got to rally back to say 68, 68, 70, that you would view that as a shorting opportunity.
Yeah, even 68.35, where we have these former highs before the break higher, 68.35, and then we broke it back below. We had these former highs coming in. So if we even get into 68.35, I would love to add to the position. So to me, targeting on the Australian dollar too high. To me, we're coming back to these lows, and I think maybe I deleted it and show it to you. It's not this fib move. This is the overall fib move. So this rally really just a nice correction, but this is the move here that I've been watching. So for me, this is a fail. I just delete this really quickly. So this is a nice fib move, right? The correction off those highs, and then we got a failed low. So this failed low should result in a lower low than the previous low. So we came right into it. We're 10 pips off. It's likely that we'll test the lows again and break. If we break, we come into the 61.8. And for me as a fib trader, this is our line in the sand. Right. If this goes, then we're falling back to the low. You're looking for a reversal. 61.8 goes. So I'm actually looking for a move down to these lows, and basically it's just a matter of patience, because we'll have things like this pound strength coming in across the board, which is obviously a selling opportunity against the Australian dollar. So I would expect this one to get lower, and Australian dollar last week kind of broke out. And I would expect that we see Australian strength, especially as the RBA I'm sure likely gets more dovish, more hawkish. And they haven't. They've been very neutral. But I think as these other central banks pick up the tone, it might prompt them to also do so, and we might see this thing actually get rolling. The CAD is kind of the same way, and we're getting a nice bounce off last week's lows here, but it's turning over already, and we have this trend line. So same thing here. For me, it's a matter of selling rallies. I think the Canadian dollar will only get stronger, and if you're looking at it, for a target, you're going to have people coming in targeting, 162, all these former lows here. So a bounce out of 163.50 is actually right in line with support, right? So just finding opportunities to get in short and take this for a longer term target. I mean, I think, again, this is another fib move on the weekly chart, which, nice correction. This one's targeting new lows below 57.30. It's going to be a grind to get down there, especially as the pound strengthens against the dollar. But I think that CAD strength and Australian dollar strength is definitely in play, even against the pound as it gears up against the dollar. And just to round it out, the Kiwi just has been in no man's land. So, I mean, this one has just been, I've just been staying away from. There's, to me, no trading opportunity when there are better opportunities and better looks in the other pairs. So this is just not one that I'm willing to chase around. But, 179 has been the range top. 177 has been the range bottom. And, I mean, I would just, if you're going to trade Kiwi, I would keep it to ranges and not really trade a breakout until we get the breakout. No need to guess. Or just leave it alone until it resolves itself and trade the other pair. There's a lot of great opportunities. I've been very happy this summer. We haven't had the doldrums quite as much as we've had in the past. So it's been a good summer so far.
Great, Lydia. You have anything on an exotic like a pound Swiss or anything like that?
A pound Swiss. Well, let's check it out and look at the
or any other pound to wrap it up with, any other pound cross that you may want to show.
Let's look at the pound Swissy. We want to take it out to weekly. Yeah, I mean, if you're going to, I remember when this thing was at 155. That's when I was trading it. So, but 130, so this thing looks to me range bound as well. And so, yeah, I think, look, we've come off the bottom of the range and we're kind of mid-range. So you can look at a fib here, but I think, I think you sell rallies here, right? Because after this kind of break below, and I think this was, maybe that was back in 2015. But I mean, as long as we're starting being capped here by these former lows, even here where we are now, is really just a test of these lows. So to me, this thing looks bearish, and selling rallies here, actually, I think we're right in the thick of it. Zoom in a bit. Yeah, we're right in the thick of it. So you can actually, or right here. So if you zoom in a little bit, yeah, I think you kind of missed the opportunity to get short on this guy, actually. I would actually wait for another bounce. See if we can't test 126. We're only 30 pips off from there. So if it can come back into 126, you want to short with, your stop above the highs from last week. And you want to try to see if you can target at least 125. That's kind of these former highs here. And if we get below 125, then we can see a continuation lower. But until then, this definitely looks like a short from where we are now.
Okay, Lydia. So how would people go about getting your excellent quid report?
Oh, look, so I have changed over from so if you come into my blog, and so faithmightfx.com, that's my Forex blog. If you come there, you can see Learn with Lydia. I have some links here. Learn with Lydia will take you to some of the courses that I have set up. So I took the quid report oral, and now it's really just some one-on-one coaching and teaching with the quid report instead of a written report. I've gotten a lot better feedback with it, doing it kind of over video and doing a hangout with students that way. You can invest with me. I have client investors. I'm a registered investment advisor now, so we can work together in that capacity as well. And so, come to my Forex blog, faithmightfx.com. Click on the links and see how I can work with you. See how we can work together.
Okay, Lydia, thank you so much for stepping up for F.A.C.E today.
No problem. Thanks for having me back.
And I'll see you in the fall, right, my trading warrior sister?
Yes, absolutely. We'll see some of this stuff resolve itself and see where we stand versus what we saw today. That'll be fun.
Thank you, Lydia Idem Finkley at Faith Might, my trading warrior sister, for your great looks and views today.
Thanks so much, Bill. Take care, everyone.
All right. Thank you, Lydia. All right, Face. Adios. Remember, don't just count your pips, count your blessings. We'll see what happens with the euro this week. Kiwi looks, there's a few 3 drives that Tico pointed out, Blake pointed out. Some important looks about don't be too aggressively bearish a dollar in here. And of course, Steve Volge updating on his positions. He went to Madame Rue, the gypsy with the gold cap tooth, who has a pad down on 34th and Vine with 7 little bottles of Steve's Trading So Fine. So see everyone for Turnaround Tuesday. 50 Pips will be with us tomorrow. He's an anonymous guy, but you can learn from people who hide out behind a handle, and I'm going to show it tomorrow. All right, guys. See you, my trading warrior brothers and sisters. Enjoy your summer day. See you for Turnaround Tuesday and at 50 Pips. You see the link right here in the box. If we're helping you achieve your goals as a trader, click the link. It'll cost you 10 cents a day. They have the whole dream team working for you 24/6. See you tomorrow. You too, Ash.